I originally went to college thinking that I would become a diplomat, as you mentioned, and interned on the Hill, went to George Washington, Elliott School, and was, so gung-ho on policy as well as international affairs. I was part of the founding team of FalconX, a CFI prime brokerage, and before that worked at Pantera Capital within Moorhead. Quickly kind of transitioned into seeing how could I apply, some of the policy backgrounds that I'd learned in school to the financial industry, where it felt like things were moving at a much faster pace. We as the crypto industry tried to create crypto native products versus integrating crypto native value add to existing consumer products and integrate them into existing platforms like Revolut, Stripe, Robinhood, Coinbase, and other exchanges, Interact Broker, etc.
Tokenization is something that I've been keeping an eye out on.
And actually, going back to your point, I think this is such an incredible moment for, American exceptionalism. Markets are going to become 24/7. I'm really excited about that.
One thing that I've always wondered, and I'm not a technical person, but I also did start my career in venture capital, and I think it is one of the best asset classes to have access to, but also historically it has been one of the most gate-kept asset class, and I'm just wondering if there is perhaps a way to tokenize that.
I agree with you. I think if we allow for things like prediction markets, then there's no reason that we shouldn't allow for things like venture funds on the consumer level.
All right, very excited today to have Aya on the podcast. Welcome.
Thank you for having me.
Yeah, let's get started with a little bit of an introduction about you.
Sure, sure. So I'm the co-founder and co-CEO of Upshift and August. Upshift is our vault platform, and August is our on-chain prime broker. Prior to that, I was part of the founding team of FalconX, a CFI prime brokerage, and before that worked at Pantera Capital within Moorhead.
I love that. I think even before Pantera, I feel like you have such a fascinating background because it's like in policy or politics. Would love to learn a little bit more about how that happened and how did you jump from there into crypto, and then eventually being a founder.
Yeah, of course. So I originally went to college thinking that I would become a diplomat, as you mentioned, and interned on the Hill, went to George Washington, Elliott School, and was so gung ho on policy as well as international affairs. That was my focus, and one of the things that was always interesting for me is access. How do we provide access to all sorts of resources globally? And what I realized is, policy is incredibly bureaucratic, and you really need to have quite a bit of patience in order to fulfill that role. And one thing I learned very quickly in my career is I have very little patience. I am, very much an operator. I love to move fast. I love to break things, and you certainly can't do that at the scale of a government. And so, I quickly kind of transitioned into seeing how could I apply, some of the policy backgrounds that I had learned in school to the financial industry, where it felt like things were moving at a much faster pace. And so, yeah, financial infrastructure is kind of where I landed, and something that I think has allowed me to get that global reach, especially to provide access for all of these global products all over the world. And so it's been nice to fulfill both at the same time.
Yeah, no, absolutely. And how was that experience for you initially to move from politics or policy into finance and crypto? Because I feel like
Yeah,
they're like completely different worlds, you know? I think one's a little bit more formal. Obviously, crypto as an industry we know is quite it's like for 16-year-olds, you know. And
yeah. Look, I think you could say this about any industry. And sometimes you have representatives who speak on behalf of the industry that don't always reflect what's going on in the space. And, in crypto, being on the institutional side, one of the things that I found in terms of my niche is where is that vertical of folks who take the space seriously, are really, moving the needle, are approaching things with first principles and are here for the long haul. And so, not the pump and dumps, not the meme coins, not the kind of retail platforms that, are not going to last through multiple trends, but, people who are really looking to build the financial rails to actually incorporate crypto on an institutional global scale. And so that kind of left me in that, maybe drier institutional vertical. But at the end of the day, I really just have zero tolerance for some of the other stuff, as you mentioned. And so I do think that there's a lot of overlap with those two areas. And now, as you're saying with crypto policy, it's almost like coming back to where I initially started so many years ago.
Yeah, absolutely. And you were also at Pantera at one of the biggest bull markets, or during one of the biggest bull markets that we had. What was that experience like for you being there? What was the mindset of Pantera, as we know now, is one of the biggest VC funds in crypto? What was it like when you were there, and how do you think that impacted your entire crypto journey?
Yeah, great question. This was during both the biggest bull market and huge bear falling
Oh
after it.
yeah.
So it was during the kind of like ICO collapse, if you will. And at the time, it's interesting because VC investing is all about themes and pattern recognition, and the same pattern recognition that existed back in 2018, we're still seeing that today. And what I mean by that is, the companies that stuck around over multiple generations of different crypto bull markets are the infrastructure players and the aggregators. And so if you think about what's happened over, call it the last 10 years, it's predominantly been, new chains. New tokens, new layers, more abstraction. And when you think about from the user perspective, what do they care about? It's just cheapest access and simplest user experience and interface. And so it's how do you find a blend between both? And so when I was at Pantera, the fund invested in a number of these different infrastructure providers that bridge the gap between the two. FalconX was actually one of those companies, and so they aggregated liquidity across OTC desks, exchanges, market makers, high net worth retail, and players, and allowing people to have just one place to view the best price against all of these different assets and products. And then if you think about our business on the vault side, it's very similarly how do we create access of an aggregated view? How do we meet the user where they are by bringing them the best yield products that exist today and giving them the best, capital efficiency on where their assets currently, sit. And so the same theme has progressed time and time again. It's how do we take a lot of this fragmentation, a lot of these players globally, and then how do we aggregate that and bring that and offer that to users in the most simplified, cleanest way at the best price and most competitive product offering.
Yeah, no, I completely agree. I think also it's really interesting that you mentioned, and I totally, kind of resonate with that, where the companies that have actually survived through different cycles or generations of crypto have been on the more infrastructure side. But why do you think it's so difficult for consumer crypto to actually survive? And we've seen this like time and time again. There have been so many attempts, whether that's like SocialFi or different attempts. Why do you think consumer cryptos struggle so much?
Yeah, it's a great question. From my perspective, I think we we as the crypto industry try to create crypto native products versus integrating crypto native value add to existing consumer products. And so, what's been most interesting about this current wave of adoption has been how do we take blockchains, crypto assets, stable coins, and other features of crypto and integrate them into existing platforms like Revolut, Stripe, Robinhood, Coinbase, and other exchanges, Interactive Broker, etc. Now, you obviously have net new products like prediction markets, which have really taken off, but those too are getting integrated into existing consumer platforms. And so, I think what is fascinating with this wave is historically, cryptos tried to bring the users to them. And this is the first wave where we're seeing that we are bringing the products to the consumer where the consumer currently sits today. Because the question always stands, are you going to be able to compete with Robinhood head on, for that consumer, or do you have a better opportunity to blend or integrate your product offering into Robinhood's existing stack? And so I think the industry has done a much better job of integrating, products and infrastructure and tooling into the existing stack on the consumer side today versus, as you mentioned, creating net new verticals, products, and apps like SocialFi and others, where it's just so much harder to compete for those eyeballs. And again, it's not impossible. Polymarket has done a phenomenal job as an example, but again, you're still going to have to compete with the marketing budget and otherwise of some of these existing consumer fintechs.
Yeah, no, absolutely. I think also, sometimes when I talk to my friends, even now, I would say crypto has been kind of on the radar for at least a decade now for most people. And most of my friends or family are work in TradFi or, big tech. And even for them, it's so hard to interact with anything crypto related, even today, which I think is insane. So
Yeah.
obviously, and the distribution's also much lesser than, say, companies like Robinhood or Revolut. So it makes a lot of sense. And then, given you had all of these insights and the way that you think about reaching to users and consumers, how did that kind of lead to Upshift and what you're building, and how have you kind of incorporated these insights into what you're building?
Yeah, great question. So, interestingly, Upshift started more B2C.
Mhm.
Uh, Upshift was actually founded in 2025. We had some of our institutional August Prime users ask us if they could use the underlying infrastructure on the Prime desk for this concept of a vault. And today we think of a vault as, just a smart contract that has a deposit withdrawal flow, and we're calculating the equity of the underlying position. Obviously, Prime is all about risk management and equity because we were doing cross-margin lending across OTC, CFI, DeFi, and multiple LP positions in certain pools. We had the risk engine to calculate those positions. We had the NAV underwriting, and we had the security smart contracts that we built in-house to enforce all of the whitelisting, et cetera. So it was a really easy thing for us to launch using a lot of the same core underlying infrastructure. And so we launched that in 2025. And interestingly, to your point, initially we thought a lot of it would be B2C. So we in 2025, I would say, really focused on ecosystem vaults and protocol specific vaults. And then 2026 became a full B2B go to market strategy for us. We were predominantly being asked to build vaults for exchanges, neobanks, and wallets for their specific user base. Our announcement with Kraken yesterday was one great example of that, where, there's specific institutional users. All of them are catering to geographical needs on, security regulation and audits. And so they need specific types of smart contracts that are built that will enforce their strategy as they see fit. Now, they're incredibly large organizations, and so it makes sense to create custom builds for them. But again, very B2B. Other places that we've worked and built vaults for are, broader, just exchange specific B2B vaults. But I would say today, predominantly 70% of the flows that we get within our vaults are B2B. The other 30% is B2C. And so it's almost completely shifted where we have become, again, that B2B platform, and goes back to my first point where, our go to market, we're meeting users where they already exist, whether they exist on exchanges, whether they exist on their local neobanks, whether exist on, their favorite wallet app that they're using today. We're bringing those assets and products to them directly.
Mhm. And so when you're talking to these B2B, clients or B2B companies, what is the pitch like? Or, how do you kind of convince them that you have that edge compared to something that they can build in-house?
Yeah, great question. So today we're live on over 30 blockchains. We support and price over 900 assets, and we have whitelisting capabilities on the function level for almost 100 different applications today in DeFi. I believe we're the only place that is able to fully calculate OTC options, DeFi, and CeFi in one place and price that on chain. And so, it is a stack that has taken 3 years to build on our side. And often when you talk to a lot of these counterparties, it's always, do we build, partner, produce? And, how long would it take for one of these players to build the entire stack in-house versus partner with someone like us so they can get something to market very quickly? Obviously, you've seen this, the pace of these launches really move so quickly this year. And this year has been the year of the vault. And so I think a number of the partners that we're working with have said, okay, here's a really great partnership that we can do with Upshift, so we can get a product to market while still maintaining security, while still enforcing a number of, walled garden whitelist capabilities, and while still being to price things with full accuracy. And that's very, very top of mind for us as we work with them as well. And then the last thing is, there's a number of custom requirements for some of these different places. And so, our team has phenomenal expertise both on the DeFi side, but also on the prime side. So seen things not just within DeFi and on-chain, but we've also seen private credit, we've seen corporate bonds, we've seen a number of these traditional assets that are now getting tokenized and priced on chain. And again, given our prime background, kind of puts us in a really great place to be that institutional counterparty with the DeFi know-how to value all of this stuff in one place.
Yeah, no, absolutely. I think, and to going back to your point about how, you were passionate about creating that access, I think this is truly what creates access, particularly I know a lot of people in emerging markets, like India, Indonesia, where there's a lot of restrictions on things like even US equities. But now with all of these things coming on chain, they just have access to all of these different assets that they probably didn't have access to in the past. And so, what is your kind of vision of what an on-chain prime brokerage looks like in the next 5 years?
Yeah, it's a great question. Actually, going back to your point, I think this is such an incredible moment for, American exceptionalism, if you will, because now you're able to really provide access to US companies and equity and debt products that historically were somewhat gated. And so when you think about this global opportunity to raise capital for American companies and government, at that scale, it's such a big phenomenon, and I really, couldn't be more passionate about how bullish that is for the United States. What a great signal that is for them, and then also for these American companies that are now able to potentially distribute their products to geographies they weren't able to do so prior to. And then how the Prime, model fits into all of this. There's still a lot of fragmentation, and so, even if you think about, again, going back to the Kraken announcement we made yesterday, a number of institutional users, for example, hold assets in qualified custody, both for regulatory reasons, audit reasons, and security. And historically, you can't actually invest those assets directly on chain. And so enabling a loan against those assets or minting an asset on chain that reflects assets in custody really creates this capital efficiency where now you can, get additional 1 to whatever percent on top, without compromising on the security that QC enables. And so, I think you're going to continue to find a lot more of these, very critical infrastructure enablements that allow for that extra yield. And it always, always comes back to capital efficiency. And I think Prime is always defined by, how cheap can I get an asset? How cheap can I get a product? Is it, significantly cheaper? Is it just a little bit cheaper? And then what's the user experience? And an example of that, do I have to go fund an account on 5 chains, or can I just have money in one place? And then all of the mechanics of that are operated in the back end, and I just get the yield as one number. And so that's kind of how Prime fits into it. It's truly credit. It's truly just ease of the user experience and access across all these products without having to deal with the operational overhead. Because as you mentioned, your friends, like their experience with using crypto products historically has probably not been great. And it's because there's so much fragmentation. And so
Mhm.
how do we create that layer to aggregate all of it and abstract it away in the back end? And credit is really the answer to that.
Interesting. And how do you kind of hedge against, or like actually, what would be the biggest risks that you as a company undertake? Because I'm sure every time there's like a new kind of financial product that you're bringing in, there is a lot of risk associated with it, especially if you want to stay competitive with the yields um, and how do you kind of hedge against those risks?
Yeah, great question. I mean, look, I think there's two main risks. One is risk underwriting and margin, especially as it comes to credit. And so, making sure we're working both with ourselves and then other counterparties to properly underwrite things and have the best risk engine to enforce margin liquidations is going to be important. And then even avoid them just by being incredibly conservative on, the underwriting that we do, and we partner with folks to do for those assets. So I would say that's one. And the second piece that goes into that is obviously oracles. If you think about all the hacks that have happened, Oracle is a really large risk to that. How do you properly price all of these positions? And so, today we have over 300 oracles for prices integrated on our side that we're aggregating across and making sure that we're using the same price for a specific asset that someone else is using. So do you use secondary price? Do you, some people will just hard code something to one. Do you use direct redemption price? All these things have a very large impact on, risk underwriting. And then the second one, I would say, hacks are still very much an issue in the crypto world. And whenever you're building with smart contracts, the one silver lining that exists today is I think a lot of the hacks have moved more into opsec, so operational hacks versus the underlying smart contracts. And so this is not unique to crypto. This is the same with any financially engineered hack that exists out there today for all banks. And so making sure that everyone has 2FA and there's all the, signatories required, and everyone's looking at every single signer and wallet that you're signing to, so that you don't enter into one of those situations. And again, I think everyone's really making their OPSEC quite stronger in house. And yeah, I would say those are kind of the two main areas. And the last, actually, I'll add is just building on chain is incredibly difficult. I think CeFi and traditional players don't always recognize how hard it is to build on chain. Everything is there, everything's transparent, and instant settlement is incredibly hard product to service because it means you truly have zero error for zero room for error, and so all the NAVs have to be priced accordingly. And so I think we'll actually see the industry move to, larger delays in things, whether it's an hour, a couple hours, especially on the institutional side. So if there is, God forbid, a hack on the other two things that I mentioned, whether Oracle or OPSEC, there's still room to hedge on the instant settlement side. So, you don't get hit with all three at the same time.
Yeah, it's so interesting because from your perspective, in 2026 or 2027, what are some things that you're particularly excited about, or things that you're particularly like bullish on?
Yeah, so, going back to your earlier point, I agree with you. I think markets are going to become 24/7. I'm really excited about that. FX markets are already 24/7 almost, and we'll see that with equities as well. There's no reason why you shouldn't be able to, trade equities on weekends or US holidays. If you have an opinion about something and you'd like to impose that opinion, I mean, that's kind of where we've seen prediction markets take off or even perpetual markets take off because, people want to trade those things before markets open and close. And so I'm very, very excited about things becoming much more 24/7. I am excited about, the user experience becoming closer to instant, not necessarily instant. Again, a few hours delay is very healthy from an operational and risk perspective, but definitely not T plus one. So I'm excited for that. And then I'm also excited just for, at least this is a biased perspective coming from a vault platform. S&P came out with a really interesting piece a few days ago regarding Vault as becoming a very core part of the, fund infrastructure stack. I mean, today, you know, crypto and blockchain infrastructure allows you to kind of rebuild these products from scratch. And, that is a very healthy thing for the market to do. It obviously will take significant amount of time because financial markets are massive and highly regulated, and you need to be very thoughtful on the way they're built and consumer protection. But there are huge value adds to vaults as back-end infrastructure, middle office infrastructure, NAV calculations, and fund admin. And so I'm personally incredibly excited to see a lot of these get implemented into money market funds, into other funds, into private credit, into private equity, and just, even indexes and indices. And so, yeah, I think, at least from my perspective, I think Vault's going to be such a critical part of that stack. And then, the continued expansion of stablecoins, because at the end of the day, if you think about stablecoin adoption, it's that people want to trade and move US dollars around instantly or close to instant 24/7. And
Mhm.
again, that goes back to the American exceptionalism. I think that's hugely bullish for the United States, and we should enable that. And we're going to continue to see that number go up and to the right in terms of how much stablecoin is out in circulation.
Yeah, absolutely. And I think, so when you kind of talk to institutions actually about markets becoming 24/7, what is their perspective on, their concerns perhaps around liquidity, risk management? Is that something that you've seen, or do you think they're more excited to kind of include this as part of their offerings?
Yeah, look, I think it depends on who the institution is. If it's a fund, then they're obviously looking for edge. And so it's how do they capture that edge? And, staff a trading desk 24/7, which is a hard thing to do. But again, FX already does this today. If it's an asset issue where it's operational overhead, what does it mean to, allow for their asset to trade 24/7 in terms of, just making sure that they can track all the buyers, all the sellers, asset movement, et cetera. And then withdrawals as well, redemptions, and so forth. There is risk to things being 24/7, but that's mostly an operational staffing question than anything else. But yeah, I would say institutions are excited because it means that, they can potentially distribute their assets to more users, and make more, money in terms of fees with how often these things change hands. And so overall, I think it's a net benefit to the space. Again, like there's no reason that someone shouldn't be able to, um, you know, show their view in the markets about their opinion on something on weekends. And if people want to do that, then by all means, we should enable them to do so.
Yeah, absolutely. And then the last question that I have for you is particularly when it comes to Upshift, what are some things that we can hope to see in the coming months or over the course of 2026?
Yeah, great question. So, I think from our perspective, a few things. We're incredibly excited about this announcement we had with Kraken Institutional, and we're excited to make a number of similar announcements as well through year end. Another thing that we're incredibly focused on is just the RWA space, and financial products for RWAs. And so working with RIAs and broker dealers to enable for tokenized assets to both get priced, and get access in a vault structure, for different users across different geographies. We're looking at a lot of debt offerings, whether, like I said, corporate bonds and otherwise, and instant redemption facilities, and just the financial layer that exists to make things 24/7, and to make things, cross chain. And so I think you'll see a lot more RWA products come out from us. You'll see a lot more large announcements as well in terms of distribution come out from us. And then, really focusing on how do we integrate Vault infrastructure with in existing institutions today, across however they're thinking about the tokenization stack, and their stablecoin stack, and so forth. So I think those are kind of the three main pillars. But yeah, we're very excited. I mean, I think you always talk about the institutions are coming, crypto becoming more institutional. I think you see that with the correlation of Bitcoin over the years with the S&P 500, with the Russell 2000. And so, yeah, we're more of that is going to come. It may seem a little bit drier and maybe not as fun as something like a meme coin or an NFT, but I do think we're headed in the right direction.
Yeah, no, absolutely. I think for me as well, like tokenization is something that I've been keeping an eye out on. I think one thing that I've always wondered, and I'm not a technical person, but I also did start my career in venture capital. And I think it is one of the best asset classes to have access to. But also historically, it has been one of the most gate-kept asset class. And I'm just
Mhm.
wondering if there is perhaps a way to tokenize that or something that you're potentially looking at. Because I think that would be like really, really interesting.
Yeah, absolutely. Look, I think there's a number of significantly smarter people than me working on this problem today with regards to regulations for certain funds, because to your point, you either have to be a qualified purchaser or accredited investor to access some of these different products. It always comes down to how clear are the risks for consumers to underwrite themselves, and do we believe that consumers are able to fully underwrite these things on their own? But yeah, I agree with you. I think, if we allow for things like prediction markets, then there's no reason that we shouldn't allow for things like venture funds on, the consumer level. And so, if we're basically letting people, trade options on Robinhood, then there's no reason that folks shouldn't be allowed to invest in a VC fund otherwise. So I think it really depends on, again, how transparent is it in terms of what these things are invested into, and how easy is it for that consumer to underwrite the risk. But yes, I do think that's another area that's going to be disrupted in terms of access. And again, not just access in the US, but access more globally. That real estate, there's so many things that are gate kept today, for consumer users. But I do think that, the prediction markets and the options platforms have kind of pushed, the barrier to entry, to make it more accessible for some of these other more structured products.
Yeah, absolutely. I think, very exciting times ahead for sure. But yeah, thank you so much for joining me on the podcast today. It was lovely meeting you and having you on.
Thank you for having me. It was an absolute pleasure.
Thank you for listening to Off the Record. If you like this episode, like, subscribe, and leave a review. It helps the podcast grow. You can find more episodes wherever you get your podcasts. See you next time.